Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Friday morning pre-market webcast. So daily chart of the ES, and what we saw yesterday was, another wide range day, another um, shot up at those 56.75 highs, and um, the key was the ability to get back through um, 46 half and then get back through 51. But what I'm more focused on for this morning is what's been happening in the overnight. So we talked yesterday about the ability or the inability to get through 46, 47. What we're seeing in the overnight is you've got 56.75 here. And it was challenged in the Globex, but it's really important. And I said this I think Friday of last week that the Bulls no it would have been that the Bulls needed to make new highs today. I think it was Tuesday. Um, they haven't been able to do it since, and I'm really emphasizing it today. The 56.75 needs to get taken out today. The longer the Bulls just malinger above 50, and I don't have any other word for it, the more opportunity there is for the Bears to go ahead and pull this market back. Now, the Bears are blowing it too. The Bears had every opportunity to make this area, 46-48, to make this area um, solid resistance, and they couldn't do it. They absolutely couldn't do it. Every opportunity. Um, so what we may see here is another slow test of like the 46 to 48 area, I would say now. Another nice slow test. You see the daily pivot there, the purple dotted line there, 47.75. That may be what this is. If that's what it is, that's fine. But the bounce that comes off of that needs to take out those highs. If that happens, then the Bulls are in very good shape. They have um, survived a very choppy week and have come out, you know, on top with the ability to close, the ability to make new highs, not once during the week, but twice. If we close above 56.75 today, that's very strong. Um, the other side of the coin is we break 46 again. There's only so many times that the Bulls are going to get to lose that area before they won't be able to get it back. The Bears are weak. The Bears can't get it together. The Bears can't sustain a trade. That's all very true. And that's all been played out over the last, 15 to 18 months. You could argue it's been played out since March of 2009. Um, but they seem to have a little bit more behind them this time. So the Bears really cannot afford to lose these areas that they have fought to take back so many times. Certainly losing 37 again would be potentially a blow if the Bears can get down there and actually make a lower high and then a lower low. Something they haven't been able to do. I mean, they've just been doing a bunch of V bounces. Straight up, straight up. And the velocity of these bounces has, kind of bear market rally written all over them. The problem is they result in moves almost back up to new highs. Or in the case of Monday, two new highs. So this is a market that is really trying to decide what it wants to do next. Does it want to continue with business as usual? Or is it going to turn into more of a range-bound market for 2014 that provides a lot more two-sided trading? We shall see. The fact of the matter is yes, we did get a deeper pullback here than we usually get, but the result of that pullback has been the same as every other pullback in the past. It's resulted in new highs. So what's different this time? Nothing. Really nothing. I'm being very picky about the way it's acting up at the top. Um, because what I'm not seeing is after the new highs got made on Monday, I'm not seeing that usual bullish push through. And maybe we get that today, but that's what we have to watch for. And if they continue to not be able to make that bullish push through, that adds into the, what I was talking about earlier this week in the back of my mind about, maybe there's some kind of a change in dynamic coming. Okay. Everybody have a fantastic weekend. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back Monday morning with another webcast. Trade them well, everybody.